KLIF News and Information. Now, live in studio, your host, local real estate expert Steve Hakes.
Welcome to Real Talk Texas. I'm your host, Steve Hakes. Real Talk Texas is a forum where our listeners can get real advice from real experts. And as always, you can reach out to me with your personal questions by jumping online and visiting realtalktexas.com. That's realtalktexas.com. Or simply you can call me when I'm off the air at 214-643-6021. And yes, I'm a federally licensed mortgage originator, NMLS number 242522. In November, we started talking about advice that we would like to give our listeners about how to protect themselves and what kind of financial moves to make, and actually what kind of legal structures that you may need to put together that will help you with both your taxes and your personal financial planning. And we had Lori Ashmore Peters of Ashmore Law in Dallas to discuss trusts and business structures that you might use. Last week we had Andy Robb of Ameriprise to talk about financial planning. And after the show, I talked with Andy, and I said, hey, we'd really like to keep going forward on the financial side. You know, who would you refer as far as a tax professional? And he quickly gave us Homer Brown's information. And Homer Brown is a partner, and he's a CPA with Smith, Jackson, Boyer, and Bovard, with offices in Dallas. He's worked as a CPA for 30 years and is an expert in accounting and tax preparation and planning. And so I would like to kind of introduce you a little bit here, Homer, as far as what your background is. You've got a bachelor's and a master's in accounting from the University of Oklahoma. And I don't know how that goes with our listeners here in Texas or your business in Texas, but, I grew up in Columbus, Ohio, and, I don't know about, doing business with people from Michigan, but I don't know how that plays out. We can kind of talk about that later. But also, Homer's done a lot of other things to give his time to other people, and he was in Air Force Security Police for 8.5 years in that service. He's a member of the Texas Society of CPAs. He's a past treasurer of the Dallas chapter of American Marketing Association. He's a treasurer of Canyon Creek Presbyterian Church, and he's registered to practice in Texas, Arkansas, and Oklahoma. So there's your Oklahoma Sooner thing there as well. And I know us Texans here, we still like our neighbors to the north, so a little different than the Ohio-Michigan thing. So first, one of the things I wanted to just talk about, we started talking last week with Andy about the fiscal cliff and things that were coming. And, you hear about this on the news. And I don't know about you listeners out there, but I get a little confused by all the talk that happens on TV. And it seems like this fear thing coming on, that this major thing's going to happen, the world's going to end. I'm not real sure what the cliff is. But for our listeners out there, Homer, I mean, you're in the thick of it with the tax preparation and planning and things like that. What are we talking about?
Well, the fiscal cliff is that boogeyman that's underneath the bed right now that you hear in the newspapers and on air, discussing the increase in tax rates, the increase in other benefits going away, actually, be they federal programs and assistance, whether or not it's the National Park Service budgets, those amounts being cut. From my aspect, I focus mostly on the tax implications. And those are certain deductions that will go away or be limited, and tax rates that will substantially increase, and most notably the Bush tax cuts is what they've referred to. And some new tax provisions that come into play, which really isn't part of what they've termed the fiscal cliff, but will impact taxpayers starting next year.
Well, it sounds to me like our current administration, they really like spending a lot of money, and they have some programs that they really want to push out there. I think everyone's got to brace themselves or get prepared to pay higher taxes. When we look at doing our taxes for this year, Homer, what are the things that I can do as an individual right now to get ready for my taxes right now? Are there moves that I need to make as far as getting ready for a change? What are you advising your clients?
Right now, I'm advising them to give me what their expectations are. Do they expect that the Bush tax cuts will actually expire and their rates will go up, or do they expect that it will be reimposed as President Obama wants it, only for the wealthy, as he terms it, this threshold amount? And we can do an analysis, and I would recommend anybody do an analysis of their 2012 and their 2013, looking at the expiring tax provisions that limit deductions or may also increase your tax rates next year, and compare the two and see if there's some movement that you can make between deductions and income between those 2 years that makes sense, that will have an overall benefit to that taxpayer between the 2 years.
Now, one of the things in the real estate industry, and as a mortgage broker, one of the things we talk about home ownerships and the value of home ownership. I know that there's some talk about taking away the deduction for the interest you pay on your home. Is that part of this fiscal cliff, or is that something new that's being discussed?
The fiscal cliff, as it's defined or as it's been discussed, are the automatic changes right now that are in place, either new law coming into place or old law expiring. Now, the home mortgage interest deduction may be one of the candidates in negotiation to avoid the fiscal cliff that could come in and limit. It could be limited based on the amount of income you have. It could be limited only for second homes. There's already a limit for $1 million of your home anyway, so they could ratchet that down if that's what they want to choose.
Depends on where the government's defining who's wealthy and who's not. I mean, some of the things I hear about people making $250,000 or more are supposed to be wealthy, and I'm not sure that they are. But that's where we're at today, right?
Absolutely. President Bush has this threshold amount of $200,000 for individuals that are single, $250,000 if you're filing joint. Whether or not that number could move, it's already a reference point for a new Medicare tax coming into play next year. And that is not really part of the fiscal cliff.
Okay. We were talking about the fiscal cliff and losing some deductions. Is there anything that I would be familiar with that I might be losing as far as a deduction in my normal personal income tax?
Well, this next year, the medical expenses limitation, right now it's 7.5% of your adjusted gross income, which is basically that number at the bottom of page 1. That limitation goes to 10% next year. The rest of the itemized deductions could be capped. There is a provision a number of years ago. We used to lose some of our itemized deductions as your income went up. It gradually decreased as a ratio. That comes back into play because that was part of the Bush tax cuts.
So back up a second. If I'm listening out there and I do an itemized return, I don't just do the easy form, and I keep all my medical receipts and things like that are happening. What I heard you saying is that right now there is a limitation, meaning that if I don't spend more than $75,000, say I make $100,000 and it's 7.5%. So if I don't spend more than $7,500 in my health care bills, then I really can't itemize that deduction. Is that what I hear you saying?
Yeah,
that's today.
Correct.
And that may go to $10,000 next year on that same scenario.
There's really no benefit for those, from a tax standpoint, for those medical expenses.
For that deduction.
Right. And next year, so if you have some medical expenses that you're over the threshold this year, then one of the planning opportunities would move it forward, prepay some of your medical expenses.
Well, if you've just tuned in, you're listening to Real Talk Texas. I'm Steve Hakes, your host, and today we've got the great honor of having Homer Brown in the studio, and he's a 30-year expert in taxes. He's a CPA, and he is a boomer sooner. Come back and listen in a few minutes.